Closed at the bottom of the implied move for the day. Down, well, actually, down a little from the bottom of the implied move for the day at 69.05, settling around that big, well, just above that big pile of gamma that's dated a little further out. We'll see if there's any erosion in that positioning tonight. But ES retested 69.63, which was the confirmation level for a failure. Um, and then that got rejected. So we'd be looking for a new low, 69.36 in the overnight session to confirm continued downside. However, this whole trend doesn't actually break down unless we lose 69.17. So this consolidation's still bullish for now. So keep that in mind, especially going into tomorrow where we have a bunch of data and all of that data prior to the FOMC minutes and end of month. I could see bulls pushing for a mean reversion back at like ES 69.80 before we get into the middle of the week. So yeah, be a little cautious of that. They did build up some sold put support today, and volatility in the short term at least rose enough that there was some intraday positive carry on the short vol position. So we definitely got some sellers, just maybe not enough to stop the rejection that we've been on since testing Gamma Max on Friday morning. Yields across the curve coming down, and this might be what I was talking about last night, where we're seeing about 100-ish billion dollars worth of equity to bond conversion. But we are seeing the front end light up a little bit in the 6 month. 3 month is kind of flat, but the 6 month being up today is somewhat interesting. Obviously, both are above the federal fund rate by about zero point 0.1. So that's a little bit interesting. Obviously, the silver and gold squeeze. No, I mean, gold wasn't squeezing, but silver squeeze to the upside's pretty dead, pulling back 8.5% today, which I don't think is the low, but it definitely got battered a bit. Copper also down. Oil rebounding on that drop, probably helping stabilize commodities a little bit. Yeah, overall commodities only down 1.69% on the day, even with the loss in precious metals. And then correlation on the 1 month starting to turn around a little, but lower than last Monday. Or wait, lower than earlier today, but turning around into close. 3 month correlation, same. Those may be starting to bottom out. This divergence in the front end vol is probably not going to persist very long. They usually don't. Um, and so we might see volatility on the front move up rapidly. If it does, then we're going to continue to get downside here. Bond volatility picked up a tiny bit last week, not much. Leverage on the carry trade starting to fall off a bit. And we're seeing that come alongside a slight improvement in the forward yield on volatility and a push up in the 10-2 year. So forward yield on vol back up to negative 14%. And this new chart on here is kind of like uh, intraday carry requirements, and then cumulative cost to carry on the carry trade, but with a haircut parameter for silver risk. And this is kind of showing that there was a little bit of squeezing going on due to silver. That's flipped back the other way, and margin requirements are declining rapidly, and that's what you'd expect. So, at least functionally, the tool seems to be working. But with an 8.5% decline today, I would have honestly expected carry requirements or like margin requirements to have eroded a little bit more than they did. So it's still fairly high there. Um, Skew snapped back down on Friday, and we'll see what happens today. Probably flattish. Um, We've got we've got breadth widening a little bit, with 20-day movers falling off a little faster. Russell and Dow down today a bit more, and NQ as well. Actually, ES performing the best of the major indexes. Fed fund futures are pricing in still slightly more rate cuts, but we'll get more data, like actual data tomorrow. The 210, it's just around 0.65. VIX correlation continues to fall and VX continues to fall. So the longer dated volatility really not doing much. And we're still seeing a little bit of selling out there where the positive carry is slightly better. Leverage flattened out today, after declining Wednesday through Friday of last week. We'll see if we get a continuation on that. SOFR IORB spread blew up big. SOFR moved up. Jesus. Is that right? Fuck. I wonder if that normalizes with silver today, because that's a significant divergence. SOFR above the standing repo facility rate at 3.76. Real-time SOFR, or proxy of real-time SOFR, is at about 3.8. So still maintaining a somewhat positive spread, but a huge spread on IORB. That's 11 points. That's fairly significant. If we continue to see that spread stay blown out, obviously we have end of month coming up here. But this is, now remember, this is with, what's interesting about this is with the Fed's, $40 billion a month in rollover. And we're still seeing this. So that's not a great sign, right? That means that their quote QE is bullshit, or at least insufficient to temper rates at the front end during the end of month settlement period. Now this is end of year. There's a lot more pressure. A better example would obviously be, like a monthly rollover away from the quarterly, but that is somewhat significant, I think. And we should probably continue to keep an eye on that. I mean, that is not easy to remove. I mean, that spread does make the short-term financing rough. That would explain why we're seeing this 6-month yield up so high, despite yields on the rest of the curve moving down. We should probably continue to watch that in the overnight, and then also watch that tomorrow. If that spread continues to widen, it tends to be pretty bearish for price action. And then out here on the technical side of things, we failed the technical trend, falling below 69.20. We retested that level, rejected off of it again. So we have a failure of the trend, a retest of the trend, and a continued failure. So the next level we'll be looking at is 68.82. A failure there marks the beginning of an actual rejection to the downside, where we could see range down to 68.50, 2023, or even like 6,800, which would be a test of the low of the trend. If the overall trend, this local trend fails, that reopens tests down at like 67.72, 65. So quite a ways to move if that continues to fall. The 200-day MA is still way the fuck out here at like 6,200. So there's obviously a way bigger pocket to the downside for price action than there is to the upside. Generally, generally that effect is most pronounced when you see like VN and GM compress really, really tightly, which we saw last Friday, where we rejected off of what was Gamma Max and is now Vega neutral at the time, and then started to fall. Now, if we fall enough, like under 6,900, there's very little support between 6,900 and gamma neutral on the monthly chain, or delta neutral on the weekly. Oops, there we go. And then under that, big way down towards JPM long puts, which are about to be replaced. So put delta or long put delta to the downside is probably going to roll up, because if we look at like 5% from spot right now on the JPM collar roll, we'd be looking at like those puts moving up towards like 65, 60, 65, 50, somewhere in that range, which will obviously put them a lot closer to spot, especially if we slip going into the end of the month. So we'll keep an eye on that, bringing the puts that much closer to spot with very little downside support and erosion of the sold put positioning that is currently supporting upside price action. Could both have a pretty detrimental effect, because the roll up in the long puts would probably be roughly on par with around where we see most of the current leverage. If we look here, yeah, most of the current leverage is right about 4.9% below spot, 4.1%. Yeah, I guess 4.9% below spot is kind of the, so that's gonna, when that collar rolls, it's gonna flatten that delta that's in that range, and it makes it easier for us to slide down. It makes all of those sold puts a lot less supportive to a degree. I mean, obviously, it's not the end of the world, but it does shift the dynamics of spot support here. Anyway, that's it for the day. So thank you guys so much for tuning in, and I will see you tomorrow. Have a good night. Peace.